Welcome back to the Deep Dive, your shortcut to being truly well informed without getting buried in all that information overload.
Glad to be here.
Today, we're plunging into the world of Tempus AI, ticker symbol TENNES.
Yes, Tempest.
This company is a genuine head turner, an AI powered precision medicine platform that people are saying is, well, growing like wildfire in healthcare tech.
And that's really the heart of it, isn't it? That tension. On one side, you've got this incredible innovation, the rapid growth, the potential. It's all very exciting, no doubt.
Right.
But on the other side, our sources are flagging some pretty significant financial and market risks. Those demand just as much attention.
Okay.
So our mission today really is to give you the complete picture, both the dazzling upside and the challenges underneath, so you can truly grasp what's involved in these high growth but also high risk opportunities.
Okay, let's unpack this then. We're looking at a bunch of sources today, right?
Sure.
Analyzing Tempus AI pretty meticulously.
That's right. We've got financial reports, market analysis, even looked at community sentiment from places like Reddit and Twitter.
Good, good. So we'll explore the whole spectrum, give you a strategic view of this dynamic company.
Let's dive in.
Let's start with what's so captivating, that bright flame of innovation. What exactly is Tempus AI doing that's grabbing all this attention?
Well, at its core, it's an AI-based precision medicine platform. They're using artificial intelligence to try and personalize medicine.
Which is huge right now.
Exactly. It's a field that's not just got potential, it's actively changing healthcare as we speak.
Okay, so let's talk numbers, the raw numbers that really make you sit up. Our sources show the company's flown past, what, $951 million in annual revenue?
Yep. Over 950 million. That's not just steady growth, that's some powerful momentum.
Really cements their image as a leader, a front runner in AI healthcare.
It does. But what's maybe even more fascinating here isn't just the financials, it's how that translates into market buzz, community perception.
Right. What are people actually saying?
Well, our sources show a big uptick in online chat, like mentions on Reddit. They soared 28% in just 3 months.
Wow.
Yeah, often linked with keywords like AI healthcare and IPO momentum.
Okay.
And over on Twitter, sentiment's still largely positive. Over 60% positive tweets.
And StockTwits. I know that platform can be pretty indicative.
StockTwits shows about 70% of folks are placing bullish bets. Pretty strong conviction there.
So it's not just the hard numbers, it's this sort of collective energy, this conversation building around the company.
Exactly.
Does this kind of buzz present, real opportunities? Or is there a risk it's just froth, a lot of hype?
That's a really sharp question.
Yeah.
And the sources suggest it isn't just noise. You've got influencers actively highlighting Tempus AI. They call it a high-risk growth stock, but one that offers volatility trading opportunities.
Okay, so acknowledging the risk, but seeing potential in the swings.
Precisely. And if you connect that to the broader market, this buzz could open doors, like maybe getting included in ETFs.
Which could bring in significant institutional money.
Could, yeah. And of course, you've just got the general tailwind of AI and medicine pushing companies like Tempus forward. So yeah, caution is always smart, but this widespread talk definitely shows its visibility and, perceived potential.
Okay, that paints a pretty powerful picture, an innovative company riding this wave of market excitement. But like you said, every intense flame casts a shadow. There's often significant heat or risk just beneath the surface.
Always.
So let's turn to those risks now. Understanding them is just as critical as understanding the growth story.
Absolutely critical. And if we connect this growth story to the bigger financial picture, the vulnerabilities our sources point out are, well, they're pretty substantial.
Like what specifically?
Okay, so despite that impressive revenue growth we talked about, Tempus reported a net loss. A pretty staggering one, actually, minus $199 million.
Oof. Okay, that's a big number in the red. That immediately flags a concern.
Right. And then there's this imbalance between their cash and their debt.
Yeah.
The company has $291 million in cash. Sounds okay on its own.
Yeah, not bad.
But it's dwarfed by their total debt, which is $853 million.
Whoa, okay, that's a huge gap.
It is. And that leads to a very high debt-to-equity ratio, over 260%. Plus, a troubling lack of ability to cover their interest payments from earnings.
So they're burning cash and carrying a lot of debt they might struggle to service.
That's the concern, yeah. This isn't just abstract numbers. It points to a significant funding risk. The potential for dilution is very real here.
Meaning They might need to issue more stock or convertible bond.
Exactly, to raise more capital,
Yeah.
which, could diminish the value of existing shares.
That's a lot of red flags just on the financial front. What's driving that $199 million loss? Is it mostly R&D spend or operational costs or...
Good question. The sources suggest it's kind of a mix. Definitely aggressive investment in R&D, which you expect, right?
Right.
To stay innovative.
Spend money to make money in tech.
But also the significant operational costs that come with scaling up a complex AI platform, especially in a field like healthcare that's so highly regulated.
Right.
This kind of upfront investment is common in high-growth tech, totally. But that debt structure, it really amplifies the risk.
And it's not just internal factors, right? There are external pressures, too.
Oh, absolutely. You
Yeah.
can't ignore the wider environment. We're seeing the impact of high interest rates everywhere.
Making borrowing more expensive.
Exactly. That puts pressure on funding costs and company valuations across the board, especially for growth stocks. Plus, while Tempus has had some positive FDA approval news, regulatory hurdles are always a factor in healthcare. They can significantly change a company's path.
This raises an important question then, particularly for maybe medium-term investors. How directly linked is the political and policy environment, like, say, the Fed's stance on interest rates, to a company like Tempus's funding burden?
Our sources highlight this as the #1 risk for medium-term investors. It's a direct, critical connection.
Okay.
High interest rates mean more expensive debt, period. That directly hits profitability and the ability to grow without potentially diluting shareholders further.
It's a fundamental lesson, really, understanding the whole picture.
You got it. You just can't separate a company's financial health from the macro environment. It all connects.
Okay. So we've seen the dazzling allure, the growth, the innovation.
It's full flame.
The flame, right. And we've seen the intense financial heat, the risks, the debt.
Right.
What does all this mean for the stock itself? For trying to understand its actual movement day to day, week to week? This clearly isn't a simple straight lineup kind of story.
No, definitely not. And if we look at Tempus AI's recent market behavior, our sources indicate it's mostly been stuck in what they call a 3-month box range flow.
A box range, meaning trading sideways.
Pretty much. Consolidating.
Yeah.
The price bounces between a defined upper and lower level.
Yeah.
Suggests the market's kind of undecided right now.
But is that likely to continue?
Well, there's a strong possibility, according to the analysis, of a swing trend opening up, maybe in the fourth quarter.
So a breakout from the box.
Potentially. But it's a double-edged sword. There's also a risk it could synchronize with a broader NASDAQ index swing downturn.
Which could drag Tempus down with it, amplifying any negative move.
Exactly. So potential for a bigger move, but the direction isn't guaranteed, and broader market risk is definitely a factor.
Okay, now, our sources talk about specific market rhythms and these key points. I think the term used was MACGM. Can you elaborate on that? What do these tell us? Understanding these rhythms seems vital for navigating something so volatile.
It does, yeah. MACGM basically means key points or critical inflection points. From a rhythm analysis perspective, we see different signals depending on the time frame you're looking at.
Okay, like short term versus longer term.
Right. So short term. The sources note a trend convergence or formation happening alongside a rhythm decrease or transition.
Which means?
Basically, it signals increased volatility is likely. Things could get choppy. The market's trying to figure out its next significant move.
Okay, more uncertainty short term. What about swing trading?
For the swing time frame, they see rhythm development or formation. That suggests a new wave, a new momentum push is potentially building up, pending.
And medium term, looking out a bit further.
Medium term shows rhythm development or formation as well, but it's described as accelerating or maintaining. This indicates that the underlying growth expectation, despite the risks, is still very much alive and kicking, potentially continuing.
That's a really interesting, almost musical way to look at market signals. What about the more, traditional technical indicators, RSI, MACD, what do they add?
Good point. The Relative Strength Index, RSI, that's currently neutral, hovering between 45 and 50. Not overbought, not oversold, just neutral.
Okay.
And the MCD, the Moving Average Convergence Divergence, that shows weak momentum spreading. So again, not a strong bullish signal right now in itself.
So the standard indicators are kind of cautious, maybe lagging behind that rhythm analysis?
Could be. The sources also mention using a technique called VPAR. It's a specific tool for monitoring live index movements, trying to pinpoint those exact inflection points, the MACGM, where a trend might suddenly reverse or really accelerate. It's about anticipating the market's next comprehensive move.
Got it. And just to wrap up the technicals, our sources also applied Elliott wave analysis. What does that layer add to the potential path forward?
Right, Elliott wave. It suggests that short-term, the stock is likely in a wave 2 correction phase.
Which usually means a pullback after an initial rise.
Exactly, a consolidation before potentially moving higher again. Looking at the swing time frame, it seems to be getting ready for a wave 3 entry. Wave 3 is often the strongest, longest impulse wave in the Elliott sequence.
And does it give a target?
It aligns with a potential target around 90, according to the analysis.
Okay. And medium-term Elliott wave?
Medium term, there's a possibility of a wave 4 correction phase down the line. But that would need confirmation that the underlying uptrend is still sustainable. So it provides a kind of potential roadmap, helping understand where the stock might be in its broader cycle.
Okay, wow. So given this really complex picture, the dazzling growth, yes, but also the serious financial risks and these intricate market rhythms and technical signals, what are the actual concrete strategies for engaging with a stock like Tempus AI? Clearly, just buying and holding blindly, setting and forgetting, isn't the recommended approach here.
Oh, absolutely not. You're spot on. Our sources outline specific investment recommendations, but they all heavily emphasize the high-risk, high-reward nature. The focus is really on swing and medium-term strategies.
What about short-term? Any quick plays?
For the short term, the advice is crystal clear. Caution. The sources literally state, entry signal lacking, maintain observation.
So basically, sit on your hands short-term. Don't jump in yet.
Pretty much. It's not the time for quick in-and-out moves. The market just hasn't shown its hand clearly enough for that yet, according to this analysis.
Okay, so short-term is a no-go for now. What about those swing and medium-term approaches if someone has a slightly longer horizon?
Right. For a swing strategy, the sources get quite specific. They suggest a potential entry around 71 with a target price of 90.
Okay, that aligns with the Elliott Wave 3 idea.
It does. But it's not a simple buy at 71. They strongly recommend a two-split purchase strategy.
Meaning buying in two parts.
Exactly. Buy half, then maybe wait and buy the second half. But crucially, only after what they call Tree AP resolution.
Tree AP resolution, what's that?
As the sources define it, it means waiting until at least 2 distinct stages of market confirmation occur. Basically letting the market show stronger consensus, prove the move isn't a fake out before you fully commit. And you need confirmation of that rhythm transition we talked about.
Okay, so patience and confirmation are key for the swing trade. Got it. What about medium term?
For the medium-term strategy, it's more defensive. A suggested entry is lower, around 62, specifically near that key point, or make jam, of 63.
Interesting.
Again, a two-split approach is advised. But here, the target price is left unmeasured.
Unmeasured, meaning no specific upside target.
Right, which really underscores the need for incredibly diligent risk management. Because of the volatility in the longer time frame, setting a hard target is less reliable. It's more about managing the position and risk as it evolves, having a complete understanding, entry to potential exit, based on how the situation unfolds.
And that brings us right back to something you keep mentioning, risk management. Why is it so absolutely paramount, especially for these newer volatile stocks like Tempus AI that are still kind of finding their feet in the public market?
Yeah, I mean, for these kinds of stocks, high growth, yes, but high volatility risk management isn't just, a good idea. It's the bedrock. It's the absolute foundation if you want any kind of sustainable strategy.
What precautions specifically?
The sources are clear. Strict stop-loss criteria are non-negotiable. You have to protect your capital. You also need to be mentally prepared for those funding and dilution possibilities we discussed.
Right, the company might issue more shares.
Exactly. Understand that can happen and how it might impact your holdings.
Yeah.
And for medium-term investments, minimizing leverage is really crucial. Using borrowed money here just amplifies potential losses significantly.
Makes sense. Anything else on the risk front?
Yeah, there's an interesting point about institutional versus quant or AI flow. Post-IPO, there's been somewhat limited institutional interest, which can mean less stable, long-term demand, holding the stock up.
Okay.
But you do see quant funds and AI trading systems jumping in and out, playing the volatility. That demands really dynamic response strategies if you're trying to trade alongside them. So you need to be adaptable.
And one last thing.
And finally, the sources note a rising short-selling ratio. More people betting against the stock, that could signal increasing bearish sentiment or just lead to more volatility if there's a short squeeze. Either way, it's another factor demanding a comprehensive strategic approach. you need to be ready for anything.
Okay. So we've really taken a deep dive into Tempus AI. It's this company with a truly dazzling growth story, isn't it? Like that bright flame leading the charge in AI-powered precision medicine.
Absolutely. The potential is undeniable.
But, as we've thoroughly explored, it also carries some considerable financial and market risks. That intense heat surrounding the flame, the debt, the losses, the volatility.
It's the classic double-edged sword.
Yeah.
Which leads to the important question, really.
Yeah.
How do you, as a learner, as a potential investor, approach these kinds of high-stakes opportunities? It's not easy.
Yeah.
And our sources consistently suggest that understanding the market's rhythm, mastering your timing, and having incredibly disciplined risk management, these aren't just good practices, they're absolutely essential. If you want to even try to capture the value here, it's about taking a journey, right? Seeing the path, understanding the beginning, the middle, the end of a market cycle for this stock.
Tempus AI grows like a flame, powerful and bright. But successfully engaging with that flame, holding on to it, it seems to require really cool-headed risk management and incredibly precise timing.
Couldn't have said it better myself.
So here's something to think about. What's one aspect of this analysis, this whole picture of Tempus AI, that you found most surprising? And how might that change your approach when you look at other innovative but maybe volatile companies out there in the market? We'll catch you next time on The Deep Dive.